Welcome back. I'm Pratap here. Today is the 9th September 2024. In today's HLQ zone analysis, primarily I'm going to focus on two important topics. And today we achieved 1:7.5 RR in Nifty's trade during today's intraday session. How we are able to achieve? What could be the reasons? Because many of the traders are trading in Nifty or Bank Nifty. So they need to learn a few important points. So that is one objective. And the second one is why we should be independent traders. Why we should not depend on the calls provided by the others. Calls means recommendations. Because we know that many people are making losses by getting the recommendations from the others. What exactly the meaning of independent trader? So these things we will be discussing because we got very good examples to make you understand the reality why we should become an independent trader. Otherwise, how we will be getting losses, you will understand. And at the end of the video, I will be focusing on HLQ zones generated in the previous report and our discussion not more than 5 to 10 minutes. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, you please click on the tab post. Some of you might be seeing the tab community instead of posts. So whichever the tab you see, you click on the tab, then you get access to this post. And this post is having a YouTube playlist link that will take you to all the supply demand zone price action training videos. You just click on this link. Now we are into the playlist supply demand zone price action course. In this playlist, so far we have completed 25 training lessons. And from these 25 training lessons, we have released 64 training videos. So you need to start your training from lesson 1. For that, you need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. So from the video description, please join at our Telegram channel. It will be helpful to you. Each time when we release a new video or any other important update, we will be providing at a Telegram channel. Okay, now let's get into the analysis part. First, we will focus on Nifty 50, why we got a very good profit, what is the reason, and how we are able to identify this zone. And the second, in the second discussion, we will talk about why we should become independent traders, what will happen if we depend on the recommendations. So the reason for this success is Nifty reached into a 75 minutes demand zone. So where is that 75 minutes demand zone? Here we have a drop candle, 2 base candles and a rally candle. Now immediately you should ask a question. What is the reason the moment prices reach to this 75 minutes demand zone? There are chances that this 75 minutes demand zone also should violate. Because we have seen earlier several 75 minute zones are violated before prices entered into this zone. So here you have a ERC candle as well, again 4 base candles and a rally. This is violated. We have a drop base rally. This is violated. See here, this candle completely violated this zone. And today this zone is violated and prices entered into this 75 minute zone. So why? What is the reason for getting success about this 75 zone? What is the speciality of this zone? The reason is this 75-minute zone is a high liquidity zone. High liquidity zone, excuse me, high liquidity zone will be having a very strong institutional pending orders. Because it's a drop candle, lower wick of this candle, drop base rally. Okay. Because this is a 75-minute zone, high liquidity zone, there are higher chances this zone will be having strong order flow. Every high liquidity zone will give very good strong trades? No, not really. We have defined rules. The high liquidity zone should have a fresh fine-tuned 5-minute zone. Or if it is not fresh, that fine-tuned 5-minute zone should be a high liquidity zone. The fine-tuned 5-minute zone is a high liquidity. It supports multiple trades. First of all, how do we know this zone is a high liquidity zone? Very simple. In every reports, NeoStock generated reports, I am generating for NIFTY and Bank Nifty supply demand zone chain. Look into this, the fourth one. This is a high liquidity zone and it is a fresh zone. When this zone is created on 21st 8 10:30 is the leg in, 2 base candles, after that a leg out candle. And this is the drop base rally, DBR. And look into this. We have a drop. This is on 21st August at 10:30. Then you have 2 base candles and then you have a rally candle. Okay, you might be asking a question. Maybe we did not take a subscription. We may not be knowing this is the high liquidity zone. True. Many of you did not take the subscription. That's why you might be missing a lot of opportunities. The reason why I am insisting the traders to go for the paid subscription is you get plenty of trading opportunities. Why do you want to miss that? Probably you have around 15 trading related reports you will be getting within a month, a minimum. You may get up to 20 or 21 reports generated by the NeoStock software you will be getting. That is the point number 1. Within one trade you will be getting whatever the paid money you are paying. Within one futures trade mostly you will earn your money. Even if not in one trade, maximum 2 trades, not beyond that. And remaining all, you have plenty of opportunities you will be getting. So many opportunities. Unless you don't have strong tools with you, how do you expect to earn more and more money? How do you expect to get more and more profits? You are just compromising for a small token of the amount. You are thinking that why should I pay the money to the others? But how do you expect that you get more and more profits? Software tools are always will be helping you to get the maximum profits. Okay, even if you don't have paid service report, still you can identify this high liquidity zone. In this example, at least today's trade you might have identified. The reason is the old reports after 1 week or 10 days I am publishing to all you people. And those old reports, sometimes they might be helping you. Sometimes. Not every time. Definitely sometimes. Definitely you would have identified this high liquidity zone if you would have referred the old reports. I think on 31st August. 31st or no, not 31st, maybe 29th August. 29th August, I gave you a free report on the occasion of NeoStock first anniversary. If you would have referred that report, I repeat, if you would have referred that report, you would have identified this zone. When this zone was created, the leg out is on 22nd August. When was my last report I gave you? I have released it for the public on 29th August. In 29th August, you will be finding this zone as a high liquidity zone. Okay, those who already taking the subscription, immediately it is visible to them. The most nearest zone is high liquidity zone. But those who have taken 29th August reports, looked into the 29th August report, maybe some more zones you might have identified before this. They are all violated, and by the time today they reached this high liquidity zone. You might have seen that zone in 29th August. By looking into that report, you can draw this zone. This is a high liquidity zone. And today prices reached. But before reaching, is it having a fine-tuned zone? Yes, it is having a 15 minutes fine-tuned zone. Let us go to the 15 minutes time frame. Because 75-minute zone should be fine-tuned with 15-minute zone. Here you have an excellent 15-minute zone is available. See, here you have a rally candle, you have two base candles, you have a medium size leg candle. It is also part of the base. With all the three candles you have drawn, then you have a leg out candle, follow through candle. So rally, three base candles and a rally. If you are not having any confusion in identifying this zone, still our NeoStock software report might have given you this list in the 15 minutes Nifty supply demand zone chain. Because supply demand zone chain we are generating every day in everyday reports, NeoStock reports. I am providing you from monthly time frame until the 5 minutes time frame. If you would have looked into all the paid subscribers every day you are getting. Even if you are not a paid subscriber, still you would have identified this 15-minute zone because you are having a 29th August report with you. In the 29th August report, definitely you would have identified this demand zone. See, 21.8 at 14 hours. You have a leg in, after that 3 base candles, and after that the leg out. Look into 21st August 14 hours in the chart. This is the one. This is the leg-in candle. 21st August 14 hours. But you are having a report on 29th August. All of you are having that report. In that report you would have identified this zone. You would have drawn this zone, rally-based rally. Okay, now again within this area you need to identify a fine-tuned 5-minute zone. Within this 15 minutes area. Already this is a 75 minutes high liquidity zone. Here you have a 15-minute zone. This 15-minute zone is a normal zone or it is a high liquidity zone? Look into the 15 minutes time frame report. So this is the 15 minutes time frame report. Nifty 50 15 minutes supply demand zone chain. So here you have that zone 21st August. This is a normal demand zone. But even though it is a normal demand zone, it is a fine-tuned 15-minute zone. That point you should not forget. It is a fine-tuned 15-minute zone. Definitely this zone is having some weightage. This is part of 75-minute zone. Okay, now inside this 15-minute zone, you need to fine-tune with 5 minutes time frame. So go to the 5 minutes time frame. Look inside this 15 minutes area. You have a rally, 2 base candles and a rally candle. Clearly we are seeing excellent rally, base rally. And also prices were trying to reach. It didn't enter into the zone. They were trying some rejection. A strong rejection. That means a strong order flow might be there. Otherwise I would have looked for a type 2 proximal entry. Why I didn't look for type 2 proximal entry? And why I am looking for type 1 proximal? Because reason number 1, risk is still minimal. And reason number 2, before entering into the type 2, There was a rejection, huge rejection. Strictly speaking, it is a fresh zone, but according to the software point of view, it is a tested zone. The reason I already told you. I added some buffer before the zone. If prices are entering into that buffer before the zone, I am considering it is a tested. But strictly speaking, it is a fresh zone. So you can take a trade. Or if it is a high liquidity zone, even if it is a tested, you can still take another trade or until this zone is violated. If it is a high liquidity. Even if you consider this is a tested zone. Software is considered this as a tested zone because it added some buffer before this zone, very small. This is not the entry buffer concept. I have introduced a dynamic entry buffer concept. As per that, it is doing some calculations. If price enter into the dynamic buffer area, according to my software, it is a tested zone. But for us, clearly it is seeing. You may ask a question, why are you developed software like that? There are some reasons for identifying high liquidity zone. Some logic is built based on those entry buffers and all. Okay. Now look into the software. 5-minute zone. Is it really available? And what kind of zone it is? See here, 21.8, 14.45. 21.8, 14.45. See, 21.8, 2024, 14.45. This is the leg-in. After that, we have two base candles. See, after that, we have two base candles. And then you have a leg out at 15 hours. See, this is at 15 hours on 21st August 2024. So, rally, base, rally. And what kind of zone it is, this 5-minute zone? Is it a normal zone or a high liquidity zone? This is a high liquidity zone, support demand zone. Actually, it is a fresh zone, but according to my software, it is a tested zone because of adding some dynamic entry buffers. But actually, it is a fresh zone. Theoretically. I am saying theoretically, it is a fresh zone. Even if it is not fresh, still you can take a trade. The reason is it is a high liquidity zone. Our software identified this as a high liquidity zone. And S_DZ is a powerful high liquidity zone at lower time frames. So the points, what you have observed, we have a 75-minute zone, which is a high liquidity zone. That is having a 15 minutes fine-tuned zone. Inside the 15 minutes fine-tuned zone, we have a 5-minute zone. Again, that 5-minute zone is a high liquidity zone. And before the zone, we have seen some rejections. So that is the reason why we are looking for type 1 proximal entry, because there are, if you are looking for type 2, maybe price may go a little below this previous low. This is the previous low. A little below and again it will move up. That possibility is there. When it will happen? When the order flow is very strong. How do we know the order flow is very strong? A strong rejection. After that, see the price movement, continuation to the rejection. It went up to this location. When it has given such a big push, definitely we should trust this zone. And this will be a very good zone, and moreover 15 minutes, high liquidity zone, 75 minutes or daily high liquidity zone. When you fine tune that, even 5 minutes high liquidity zone also directly, even if you take a trade, still there are higher chances prices will be reaching 15 minutes target. So that's why we have defined, we looked into the 15 minutes target. See here we have a ERC, this is a drop candle, drop, base, drop. We have a 15-minute zone. And after that it picked up the orders and again prices were moved down. And again today prices entered into this zone in this candle. But before that we got a trade. When we got the trade at morning 9:30 candle, prices entered into the zone. 9:30, 5 minutes candle, 15 minutes candle. Let me go to 5 minutes time frame. Still it is 9:30 candle, 5 minutes. Let us go to 1 minute to exactly understand when it reached the entry. See here, almost 2 candles, 9:30 and 9:10 candles. It was here and probably it might have reached at the end of this candle, and after that in the beginning it started moving up, and once again a rejection came in case if you miss another opportunity near the zone. And after that, see how sharply the prices were moved, and finally at 9:48 candle it reached the target. We got the trade at 9:29 candle. And here 9:48 candle. That means in just 20 minutes your trade is completed. And what is the reward it has given? 1:7.65 RR. So we can say 1:7.5 round value. We got 1:7.5 RR it has given in just 20 minutes. In just 20 minutes. So what is the reason for getting such kind of trades? The high liquidity zones are helping you. I know many people wait a lot of time for getting for good trades. But today who helped you get such kind of good trade? Software is helping you. That is what I want you people to understand. See, while learning, you should not depend on the software while learning. The reason is, if you want to become an independent trader, you should have very strong skills. Right from learning itself, if you are depending on the software, you will not understand the issues. That's why I am strongly discouraging not to use any software reports until you complete your phase 2 training program. That is what I have given instruction in the training instructions list. And training instructions list, time to time I am posting at our Telegram channel. Why I am posting? Because many new people are joining at our channel. At least every month, at least some 50 to 60 people are joining, new members at our channel. When they are joining, they might be missing training instructions. That is the reason why monthly, 2 times or 3 times, I am posting the same instructions again and again. Even if some of you ignore, and if you are learning, at least by seeing the instructions, you will at least try to correct yourself. If you follow the training instructions and accordingly if you learn, you will become an independent trader. What is the meaning of independent trader? Independent trader means you will not take any help from the others. You will identify your trades on your own. Maybe any doubts are there in your analysis, you may discuss with the other people. But you will be in a position to identify the trades. You will be in a position to fine tune the zones. You will be in a position to identify your risk reward. You will be in a position to identify what is my exact entry, what is my stop loss, what is my target. You will be in a position to add the stop buffers and identifying the revised stop loss instead of the zones digital lines. Such kind of decisions you are taking. How we are taking? By analyzing the charts. But while analyzing the charts, there are 200 stocks are there. It is not possible for you to analyze the 200 stocks. That too at multiple time frames. It is impossible task for the human. Hardly how many you will analyze in a day? Some 10 stocks or 15 stocks or 20 stocks. Not more than that. So you will be having favorite stocks. You will take that list. From that list you will analyze and you will identify. And finally, none of the stocks are triggered the trade in the next trading session. Then what will happen to your entire analysis? What will happen to your entire effort? It is getting wasted, right? You will be missing trade opportunity for a day. Like that you may miss 2 days, 3 days or 1 week continuously. So what happens to your efficiency? Your efficiency is going, your experience will improve, no doubt in that. But your efficiency is going down. And efficiency is improved by the software reports. Software is quickly analyzing the 200 stocks and it is identifying some 5 stocks or 10 stocks, and it is displaying, giving you the final result. And you will analyze only those stocks. Those 5 stocks or 10 stocks, probably you may get 1 or 2 trades in the next trading session. And immediately you get the money. And many people are missing this simple strategy. If you want to earn more money, you should work in an efficient way, not inefficient way. While learning the concepts, you should learn in a hard way. But while trading, when you want to make money, you should act like a smart way. You should understand the difference between hard way and a smart way. While learning, always you have to use hard methods, not smart methods, while learning. That's why you should not use software reports while learning. Once your learning is complete, you want to do final practice. At the time, you can take software helper final practice. And next you want to enter into the trading. That is the time definitely you should depend on the tools, some software tools, whichever the tools you like. And those tools should help you improve the efficiency. If those tools are not helping, again there is no use. You waste of time, waste of money also you are spending on those tools. But if the tools are helping you earn money in an efficient way, then you should not miss the tools. This is the reason why I suggested many of you people go for software tools. Till the last month I provided free of cost only. Till July I have provided the tool. And today only, last month only I introduced premium subscription because of several other reasons from my side. Because I have my own issues and my own difficulties. But still the tool is available to you. Some people subscribed and efficiently they are using. Whoever subscribed in the month of August, except one person, remaining all are continuing with their subscription even for September also. Because they are earning the money, that's why it might be helping software, that's why they are continuing. We know that the software is helping because last almost 10 months I provided this tool free of cost for all you people. Everyday reports. When you are getting the reports free of cost, many people didn't understand its value. Otherwise, by this time you would have made a very good money. And today spending a small token of the money, that is 5,000 rupees per month for getting the reports, you wouldn't feel it is a big money. Because you might be knowing the value, because some of you people already understood. They know that within 1 day or maximum 2 days, they are earning the money what they are spending for that subscription. And rest of the month they are making money. At least majority of the days they are making money. There could be few stopped out trades, but that is very less compared to the success. Even if it is stopped out, the stopped out is very minimal because of our risk management point. While you are getting 1:3, 1:4, 1:5 RR. Look into the NIFTY, we got 1:7.5 RR till the 15 minutes target zone. How it helped? Because of our NeoStock software. Because in NeoStock software, we are providing different reports. We are providing high liquidity zones. We are providing bullish and bearish trade setups for all the 4 income trades. And a couple of days back, even I explained a new high liquidity zone strategy. The trend change horizon. And those concepts are working like a magic. Because they work. Now you land, you might be feeling like it is a very interesting topic. But for me it's a old topic. And you have seen its success. And you will continue seeing its success. But when you know, only if you learn the subject only you will know. If you are taking the recommendations, are you aware of that? That tool is going to give you. First of all, I want to show you practically if recommendations are provided, why they fail. Today I want to show you practically why many times recommendations will fail. Those reasons also I want to explain with clear examples. Because some people are asking me again and again, provide recommendations, provide recommendations. Recommendations will fail. If you are an independent trader, if you spend at least a couple of months time every day, some 3 hours or 2 hours time, if you spend like that 2 months or 2.5 months or maximum 3 months, you will become an expert. You will become an independent trader. But you need to learn the subject with dedication. If you are having any doubts, I am always answering in the comment section. Some of you people are taking advantage of that facility. Whatever the doubts you are having, again and again you are asking until you get the clarity. I am also with patience, I am replying. Because why should I spend my time with free of cost? But still, I am spending my time to help you guys. Because I am the happiest person if you get the complete knowledge and if you become an independent trader. If you become an independent trader and your stopped out trades will reduce, your profitability margins will improve. But you should have some patience to learn the subject. If you don't have patience to learn the subject, how do you get the success? Calls will always fail. I am going to prove in today's session. That's why I have selected the topic. Because I got the right examples to teach you why calls will fail. Okay. So before we move on to the second topic, hope all of you understood the reason for getting success in this particular zone is because of our NeoStock, NIFTY and Bank Nifty supply demand zone chain. In this example, NIFTY supply demand zone chain. Same way you will get opportunities in Bank Nifty also. Without supply demand zone chain, you can't identify the high liquidity zones. Even I can't identify. By looking into this zone, let me move on to the 75 minutes time frame. Because this is a 75-minute zone, right? By looking into this zone, which is on drop base rally, it is impossible for me. I am repeating the statement again. It is impossible for me. I am not talking about you. It is impossible for me to identify this is a high liquidity zone. I can't tell. I can't identify. I don't have that much skill to identify. Because my mind can't work like a computer. To identify this is a high liquidity zone, at least last 10 years data, my mind should work like a computer. All the scenarios for the last 1 year, the changes, everything should be considered. And then only my mind will tell this is a high liquidity zone. It's not easy to identify this is a high liquidity zone. Sorry, this is a 75 minutes time frame, right? I have selected 125. Correcting my mistake. Okay, this is the one. The drop base rally. I cannot identify this is a high liquidity. That's why I have to depend on the software. See, software identified this is a high liquidity demand zone. Because it is a high liquidity demand zone, now we got a chance to fine tune the zone till the 5 minutes time frame. Even after fine tuning, again software helped me. The fine tuned 5 minute zone is again a high liquidity zone. That means it is a very super strong buy signal. 75 is already high liquidity. Fine-tuned 5 minutes is also high liquidity. There are higher chances to get success. Failure rate is even less than 10% or 5% failure rate. But success rate more than 90% or 95% when you have such kind of zone. Apart from that, price action clues also helped us. Here price action clue helped us here. There is a strong order flow in this area. See today what happened? It reached the 15 minutes. Those who are aiming for 75 minutes target zone, probably this is the area. It may take maybe further if the trend is changed. Now it may take some more time to reach this drop-based drop. Using trailing stop loss, some 5 minutes or 15 minutes trailing stop loss, you can aim for reaching this drop-based drop. That is possible. That is how some people will trade. I already told you in our training videos also. At the bottom they identify, and after that using some trailing stop loss, because you are targeting for 15 minute zone, maybe a 15 minutes trailing stop loss or 5 minutes trailing stop loss, you can depend, and you can target for the 75. Before that, if the 5 minutes or 15 minutes zone is violated, there you will exit and book the profit. If it doesn't, you will keep your positions until it reach this drop-based drop. It may take a week time to get into this area. Until then, you will hold your position. Those who can't take the risk intraday, you will exit at the 15 minutes target zone. This is the 15 minutes target zone. You would have exited here. In just 20 minutes, it reached the same amount you might have used in the other trades. So that is the reason why I am strictly suggesting all you people, if you would have completed the course, see, you have to complete the course, phase 1 and phase 2 training program. You should have completed at least until lesson number 24. Now I released lesson number 25. If you would have completed lesson number 25 also, it's very good for you. You will identify more trade opportunities that will give you success in the coming days if you would have completed lesson 25. See, we should not depend only on the HLQ trades. We have to depend on the even other strategies also. See, our goal is to earn more and more money. That's it. When you want to earn more and more money, wherever the opportunity, you have to take that opportunity. You need not worry the amount is a big money or small money. Sometimes the small parts will become a very big money for you after some time. All kind of trades we have to look for. First, initially we will look for the trades that will give us big profits, the high liquidity zones. If the trades are completed or if the trades are not executed, then you look for the other trades, bullish, bearish trade setups. Again, TCO zones trades, fresh TCO zones, if any, they again give you very good profits. How you will identify all these things in a short period? As a human, it is not possible, it is impossible for us. But with the help of the machine, by taking the help from the machine, you can get more profits, you get more trade opportunities. How I would have identified several trade opportunities, I will show you in this video. One is HLQ zones. Today, none of the HLQ zones are executed. If I am depending only on the HLQ zones, today I would not have got any profit. But see, if I would have looked into NIFTY supply demand zone chain or Bank Nifty supply demand zone chain, I would have got the trade opportunities today. See, I would have earned so much money today in the first 20 minutes. By 9:40, I already got 1:7 RR trade I received. 4% ROI it has given. From here to here, 4% ROI it was given. And that too, one future margin cost is only 70,000 rupees per Nifty. If you would have used, if you are an options trader, if you are an option buyer, you would have got a very good profit today. Your investment would have been very small. But the only problem with option buyers is risk management is very difficult sometimes. Not easy to manage. And other opportunities you have, bullish and bearish trade setups also you will get. Let me show you what opportunities bullish and bearish trade setups provided today. Why I want to show? Because that is also helping us earning good money. At the same time, today's bullish and bearish trade setups are good examples why recommendations will fail. Why you should become an independent trader. If you are an independent trader in supply demand zone price action, you might have already learned the concept. What is bullish trade setup and what is bearish trade setup? You might be having the knowledge. If you are having the knowledge, how it would have helped you to earn the money and avoided the recommendations, if any. Practically I will show you, recommendations are failed, but your subject, what you learn bullish bearish trade setup when market dynamically changes. Based on that, because you have the subject, immediately you take a decisions, new decisions, and your new decisions how would have helped you earn the money. And your new decisions, how you would have saved your stopped out trades. You would not have taken a trade, stopped out. But recommendations, people blindly take the trade. Okay, all of you learned at least bullish and bearish trade setup. You are aware of that. Because the trend is your friend. You follow the trend. Trend is ITF time frame, not LTF time frame. Lower time frame, that is entry time frame, is you don't bother about the trend. Your intermediate time frame, you depend on the trend. So for that, let me get into the HIT trades, hourly income trades. Yesterday we got 1, 2, 3, 4, 5 hourly HIT trades. For both bullish and bearish trade setup, we got 5 trades yesterday from yesterday's report. See, first one is Cholamandalam Finance. See, now I am going to explain the second topic, why recommendations will fail. Sorry, let me go to the 5 minutes time frame. See, this is the one suggested by our software. The 5 minute zone, drop, 2 base candles and rally. Let me delete rest so that you will understand practically. See, because this is the software is suggested, or maybe I am giving you recommendation. I have drawn this zone and I told you buy here, and this is the stop loss. Somewhere here I would have drawn this is Monday's data, right? Yeah, I would have drawn my supply zone somewhere here. And what I suggested you, let us assume if I have given this chart to you. This is the recommendation I am giving you. Let us assume I have drawn this chart and I published in the group, and I am telling you buy here, exit here, and this is the target. If that is the case, did you get a trade in this stock? No, you won't get the trade. If you don't get a trade, it is no profit, no loss. Do all of you agree? So whatever the recommendation is provided to you is getting wasted. And why suggested you? Because this 5 minute zone is part of the 15 minute zone. Let me go to the 15 minutes time frame. We have a drop, base, rally. This is a high probability trade setup within the bullish trade setup. Because I identified this is a bullish trade setup and I have given you, and our trade is not executed. But if you are having a knowledge, you are an independent trader. Let us assume you are an independent trader. You know what is a bullish trade setup. You know what is bearish trade setup. Then what will happen? See here, you might have observed there is a drop base rally is created. In which time frame? 15 minutes time frame, that is your intermediate time frame. And now this zone is no more valid because a new intermediate time frame zone is created. Now because you are having the knowledge, you will draw this new zone. This is a 15 minutes demand zone. This is a 15 minutes demand zone. Why you don't bother about this? Because you already learned. What you learned? Bullish trade setup if a 15 minute zone is violated. Which 15? The most recent 15 minute zone. Then the bullish setup is no more valid. Let us assume this zone is violated. It didn't happen today. This zone is violated. After that, price has reached. If this zone is violated, what will happen? Trend will be changed to sideways. If I provided the recommendation, people who are following the recommendation, they are not aware trend is changed. They are not aware. My recommendation is given, this is the place where you buy. This zone is violated, price has reached here. Now you will buy here. Because the trend is changed, there are higher chances this zone also will violate and further trend will be changed to downtrend. The first demand zone is violated. But our recommendation is provided. How this from where this demand zone has come up? In today's in the live market, this demand zone is created. That is the reason why always I say markets are dynamic. Recommendations are not dynamic. Remember, recommendations are static. But markets are dynamic. How can you correlate two different things? Can you correlate dynamic and static? Both are two different. You cannot compare both. Because you are an independent trader, you build the skill, you know what is bullish trade setup, you know what is bearish trade setup, you know when a new zone is created, a new intermediate time frame. Because this new 15 minute zone is violated, your trend will be changed to sideways. So you cannot take a trade. Whether you have to take a trade here or not, that is all again depending on sideways trade setup. And you are not at land sideways trade setup. So that is the reason why you can't take a trade here. If this is violated, immediately what is that you will say? Recommendation failed. Immediately we will comment. He is not providing good recommendations. His recommendations are not working. These are the statements people will make. Do you agree? Yes. What is the biggest problem with the human mindset? The human mindset biggest problem is our mistakes. Always we will try to blame the others. Then only our egos will satisfy. We make mistake, but we don't accept our mistake, and we want somebody should available to blame for our mistakes. So that's why I don't want you people a failure people. Let me repeat this statement. I don't want to see you guys as a failure people. That is the reason why I am providing complete free training on supply demand zone price action. I want you to become independent traders. Those who are expecting recommendations from me, NeoStock channel is not the right channel. NeoStock channel's goal is to make you independent traders. If you are expecting recommendations, you will always be a failure person. Because recommendations will fail many scenarios. Those failures we can identify if you have the subject. See, our software suggested yesterday this zone. But prices didn't come. Instead, in the market, a new 15-minute zone is created. Okay, luckily this zone is violated. I will show you another example that is violated. After that, price has reached here. That is our recommendation area, price has reached. After that, this is violated. Then you may ask a question, then what is the use of software reports? The reason is you identified this stock is a bullish trade setup. What do? You keep an eye on this stock. Without creation of a new 15 minutes up demand zone, if prices reaches, you will take the trade. If it doesn't reach and a new zone is created, see, immediately we have drawn the new zone and we just ignore the previous one. And this will provide the trade opportunity. If this is violated, we won't take trades in this zone because the trend is changed. How do you take these decisions? Because you already learned the subject. In phase 2 training, you already learned bullish trade setup and bearish trade setup. And how these bullish and bearish trade setups we can combine with zone confluence that I explained in lesson 23, if I am not wrong. Lesson 23 or lesson 24. In one of these lessons I explained. Lesson 25 you learned. What is that? Once it is violated, a new supply zones will be created, and then that will be providing you short opportunities. That is a trend change horizons. That is what you learned in recently lesson 25. Some of you are yet to learn that particular video. You have 2 videos in lesson 25. Okay, a new zone is created. And again you need to fine tune this new zone with the 5 minutes time frame. See, here you have a 5 minutes time frame zone. Sorry. This is a demand zone, fine-tuned demand zone. Then what is the target? This is the target. Drop base drop, the 5 minutes target. This is the supply zone. See, you got an entry and after that it reached the target. But do you take a trade? You won't take the trade because RR is only 1:1.7. But if you analyze even more deep, go to the 1 minute zone. In the 1 minute, you have a ERC candle, a very big candle, failed ERC, can use as a leg-in. You have a base, you have a rally. Let me draw this zone. Why I am drawing this zone? Because you already learned in lesson 22. Let me reduce the colors, light color. This is the daily demand zone color, so that you get clarity. Okay. See here, this is the 15-minute zone. In the 15-minute zone, you have a 5-minute zone, and now you have a 1-minute zone. In lesson 22, you learned a lower time frame zone as an horizon to the higher time frame zone. That means the 15-minute zone is, the 5-minute zone is created by picking the orders from this 1-minute zone. And after that, there is a very big push that indicates this 1-minute zone is a very strong zone. Okay, what is the advantage we got today by doing this? Now let me shift to the 5 minutes time frame. This is the first trade in this 5-minute zone. We don't accept, even though it reached the target, we don't accept because RR is only 1:1.7. But this trade we would have taken. Now it reached into the 1-minute horizon, which is responsible for the creation of this entire 15-minute zone. And this entire leg out formation and follow through candles, they were started from this 1-minute zone. That means order flow is very strong. Now you can take a trade because you get now 1:3 RR. Are we getting 1:3 RR? Let me show you. We have a long position. Let me adjust the stop loss onto 15-minute zone. because below 15-minute zone is there. And now let me keep my see here, even let me reduce some more. Yeah. See, now you got 1:3.13 RR. See, this is the first trade you got, and here it reached the target in this candle. Again, next trade you got here. 2 times it has given before reaching, but okay. After that, once again it reached the target. But this is already a pierced zone. Pierced zone can be used for target point of view, or you can also aim for bigger target. So if you aim for bigger target, we have a rally based drop. And here also we have a drop based drop, but the origin is from this area. This is probably, it could be high liquidity, maybe. I'm not sure. Possibility might be there. So that's why order flow is from this zone. See, today it reached this target. Even this zone is violated. Still you would have got even more profit. See how much RR you would have achieved from here to here. 1:6.4 RR. If you would have aimed for this particular. But from here to here you got 1:3 RR. Multiple trade opportunities you got. 2 successful trades. First trade you got at 12 o'clock 15 minutes and it reached the target at 12 o'clock 50 minutes. Within 35 minutes it reached the target, or 40 minutes. See, again next trade you got at 14 hours, or if you missed it earlier, maybe in the 14:25 you got, and when it reached the target at 14:45, 5 minutes candle. If you would have aimed for more, if you believe this zone will violate further, it will go, still it reached the target at 15 hours 10 minutes. Or maybe in this candle you would have exited here a little before the zone, or at 3 o'clock candle you would have. I'm telling you the possibility. Cholamandalam Finance has given you 2 trade opportunities. On which basis? Not on the recommendation. Recommendation, it did not provided you any trade. Recommendation helped you, software report helped you identify this is a bullish trade setup zone. The moment it is created one more 15-minute zone, immediately you revised your entry zone. This is no more valid. Because in bullish trade setup, the most recently available ITF zone is the in between lower time frames you may get, or they might be violated. Anything will happen, lower time frames. But this is the new 15-minute zone. Inside you have a fine-tuned zone. Luckily in the fine-tuned zone is created from the origin of 1-minute zone. And that origin helped us providing the RR. And prices reached to that origin area, and that helped us in achieving 1:3 RR. And we got 2 successful trades from this 1-minute origin. Because always in lesson 22, I clearly told lower time frame zone as an origin to the higher time frame. Many times, I'm not saying always, but majority of the times, the order flows in that zone are very strong. And they also supports multiple trade opportunities from the same area. See, those zones also will violate at some point of time. Every zone will have an expiry time. Until then, whatever the trade opportunities it has given, we have to enjoy those opportunities. Now tell me, if you would have taken this recommendation, if you don't have the subject, you blindly took the recommendation because you are not an independent trader. Do you get these profits in today's trading session? No. You are an independent trader and you are using NeoStock reports, both together. Do you take this trade opportunity today? Yes. Why? Because the NeoStock has already suggested this stock. You will be observing this stock. Whenever prices enter into this zone, you want to take a trade. Meanwhile, what happened? Market is dynamic, a new 15-minute zone is created. Definitely you will observe in the market. Because you are an independent trader, that means you already learned the subject. You know what is bullish bearish trade setup. When a new zone is created, immediately what you do? You will update your recommendation to the newly created zone. Because you know, the newly created zone you cannot take trade because it is no more valid. Because the recommended zone is no more valid. Because the newly created zone is violated, then trend will be changed to sideways, and this recommended zone in the previous day generated by the software is no more valid. So you don't take trade at all in this zone. Software reports should be used not for taking the trades. Software reports will be used for helping your analysis part. That is the reason why I have added one important point. Those whoever is opting for premium services, they should complete phase 1 and phase 2 training programs. Those who wants to use high liquidity zones, phase 3, lesson 21 also you should complete. Those who wants to use bullish and bearish trade setups with high probability setups, you should complete even lesson 23 and lesson 24. Those who want to use a lower time frame as an origin to the higher time frame, you should complete even lesson 22. Till the recently learned, whatever the concepts whatever the lectures I have completed, if you go through all these lectures with the help of NeoStock software, you will earn a lot of money. There is no doubt in that. But you should learn the subject properly. Please remember. Without any practice, you just attended the lesson, the videos, you won't make money. You should understand the concepts. You should have practiced those concepts. Then NeoStock software will give you, not give you, NeoStock software will help you to earn so much of money. See, today in this stock, if you look into hourly income trade, today you would have got these two opportunities. Hourly income trade suggested this stock, but you identified this stock on your own during the live market because you already completed your bullish trade setup and bearish trade setup related concepts. You know the subject. That means you already changed as an independent trader. Because you are an independent trader, the newly changed in the market in today's trading session, you utilized that opportunity. And you got a very good 2 trades from the same zone. Same money you used because this trade you got and you exited here, and after that same money is released. Again you got another trade and again maybe you exited here or exited here. Same money you used for getting both these profits. It's not the 2 different investments. That's why I am suggesting all you people should become independent traders. If this course is not available to you free of cost, maybe it might be hard for you because people are charging a lot of money for teaching these concepts. And many of the in-depth concepts I explained, nobody is teaching in the market. Probably by learning from our NeoStock videos, they might be charging the money from the other people, which I really hate that. Whoever is learning from my videos, I'm expecting them to help the other people. But anyway, I can't control that. But at least I want you people, all you people, to become independent traders. Make use of once you got a good understanding on the subject, then make use of NeoStock reports and earn more and more money. Even if you use old reports also, sometimes you get trade opportunities. Not every day, but sometimes. Everyday reports will help you to get the opportunity immediately. Because people who see today's report, immediately they would have identified there was a high liquidity zone available immediately. Today prices reached. Still you would have identified this zone if you would have looked into 29th December report, which I provided free for everybody on 29th December. Same report, this zone is available. But before that, many other zones will be there. But at least today, the zone would have helped you today. That's why high liquidity zones, keeping an eye on 75 minutes daily, high liquidity zones are very, very important. Because first time they reach into this zone, definitely it will give you a successful trade opportunity. That is what we have seen in Nifty. But Cholamandalam Finance report, you can't get from 31st December report, 28th August report, you can't find this Cholamandalam because they are the yesterday generated reports by our software. See, when this data is 6th September data and 7th September data today, you manually would have drawn this zone because you are observing market on this stock. If NeoStock software did not provided this report, you may not be having any idea that Cholamandalam Finance is currently supporting bullish trade setup. You may not be having any idea. You might not have looked at this trade. You might have missed both these dynamic trade opportunities in the live market today. When I analyzed these stocks, same way you will also analyze, because whatever the knowledge I have, I shared the same knowledge with you people while I am teaching bullish and bearish trade setups with zone confluence. That means 5-minute zone should be part of the ITF zone. Then it is a powerful combination. Even if the zone is violated, lesson number 25, what you learned in yesterday and the previous day concepts. The TCO zone opportunities you will get. Sometimes they won't execute. Today also you will see that TCO zones are not executed today. Now let me look into the next one. This is Nifty Junior, that is Nifty Next 50. Nifty Next 50 is there. And it is a bearish trade setup. And this is the one suggested by our software. Let us assume I have provided you the recommendation in this zone because yesterday software identified this zone as a bearish trade setup, and 5-minute zone is a part of the 15-minute zone confluence. So it is a high probability trade setup, the drop base drop. Is price reached into this zone? Yes, reached. What happened to your recommendation? Stopped out. Immediately what you will tell? The recommendation is stopped out and this is no use with these suggestions. But actually why it is stopped out? If you know the subject, you will simply do not take a trade in this zone. Let me go to the 5 minutes time frame first. This is suggested by our software, the drop base drop. And this is a 5 minutes drop base drop is part of the 15-minute zone. And this 15-minute zone, forget about below what happened, focus only on the 15. Now here prices reached and they are violated. Anyway, it is at the end of the market hours, you would not have taken a trade. But imagine what would have happened if this price reached this zone at 12 o'clock or 12:30 or 1 o'clock. Definitely you would have taken a trade. Immediately it is stopped out. Why you should not take this trade? The reason is another 15-minute zone was created. Drop base drop. And this 15 minutes, newly created 15-minute zone is violated, trend will be changed to sideways. That's why this is no more valid. After that what happened? One more 15-minute zone is created, drop base drop. When this drop base drop is created, this second 15-minute zone is also not valid anymore. The reason is if this 15-minute zone is violated, you can't take, the trend is not downtrend. If the trend is not downtrend and it is changed to sideways, bearish trade setup does not work because all these stocks are bearish trade setup. Yesterday, only one bullish trade setup is identified by our software, Cholamandalam Finance. But in the dynamic market, we got two trade opportunities. You would have made money from both the trades. And even though software is suggested, let us assume this is the recommendation. Still, you didn't accept this recommendation because you are an independent trader. You learn the subject you know when bullish or bearish trade setups will change, because it is a newly 15-minute supply zone. So you focus trade on this, but you didn't get a trade in this zone. Prices entered into this area, but they didn't enter into the 5-minute zone. So definitely you can't take a trade in this. Now again one more drop-based drop is created, and in this drop-based drop there is a fine-tuned 5-minute zone is there. Here you have a rally-based drop, follow-through candles, and after that prices enter into this zone. While entering, is there any new 15-minute supply is created? No. This is only the latest 15-minute supply zone when prices entered into this area. So let me go to the 5 minutes time frame. This is the 5 minutes time frame. And what is your this is the one rally base rally is the target zone. This is the most recently available demand zone. The 5 minutes demand zone and 5 minutes supply zone. When prices enter here, can we take a trade till this demand zone? Yes, RR 1:3.03. That means 1:3 RR is available. See, when prices entered here, this is the area. Because if I move a little below, 1:3 RR is not getting. That's why we went a little inside the 5 minute zone. If prices enter, there only we take the trade. Is the prices entered a little inside? Yes. Because it went a little inside this zone, we are achieving 1:3 RR. So we took a trade here and we exited in this candle. 1350 candle. Where you got the entry? 1330 candle we got the entry. This is the candle we got the entry. Even if you miss, even in this candle also we got the entry. 1340 candle also we got the entry. Let us assume this is a clear entry. There is no chance of missing. So 1330 candle we got the entry, and 1350 candle it reached the target. In 20 minutes our trade is completed and it has given 1:3 RR. See, the Nifty Junior, that is Nifty Junior is nothing but Nifty Next 50. Nifty Next 50 has given a trade today. Today Nifty has given us a long trade. Nifty Next 50 has given a short trade. Nifty Next 50 has given a short trade. After that again what happened? Prices entered into this zone. Because earlier prices entered a little deep inside. It is a higher risk of looking for a second trade. Unless it is a high liquidity zone. See, after that the zone is violated. Already we got a trade, successful trade. In 20 minutes we completed the trade. After that, not only 5 minutes, the entire 15-minute zone is also violated. Once 15-minute zone is violated, what will happen to bearish trade setup? Now it is no more a bearish trade setup. All these zones we identified earlier for bearish trade setup. Once the bearish trade setup is changed, these zones are no more valid. And if I would have given a recommendation, if you are taking a recommendation, you never know about this concept, and blindly you will take an entry next time when price has reached and it is stopped out. Why it is stopped out? Because the trend is changed to bullish. See, by violating this 15-minute zone, trend is changed to sideways. At the time what will happen? We get a TCO trade opportunity that you land in lesson 25. If you did not complete lesson 25, please complete both the videos. In lesson 25, I have clearly explained when this zone is violated, you need to look for a 15-minute zone. The newly created 15. Go to the 15-minute zone. Here we have a rally base rally. This is a 15-minute zone. The same 15-minute zone is also acting like a 5-minute zone also. We have a rally, 2 base candles rally. That means 15 minutes and 5-minute zones are almost the same. Now this 15-minute zone, rally base rally, is a TCO zone, trend change horizon. When it will be a TCO zone? When this bearish trade setup trend is changed to sideways. And who is responsible for changing this trend? This 15-minute zone is the responsible. Now immediately, without a new 15-minute zone creation, without a new 15 minutes demand zone creation, if prices are retraced, we can plan a trade, but today that didn't happen. I already told you in the training lesson. Sometimes the retracement may not happen, prices will be just moving up. So at the time we don't get trade opportunity. But anyway, but previous day we got trade opportunity on Friday. Thursday we got trade opportunities. Today we missed trade opportunity, retracement didn't happen, prices were just started moving up. Maybe this is a very strong zone. Next time again when they come, we can try. But there is no guarantee. But if retracement is there, it works like a high priority, high liquidity, because retracement didn't happen, and even no 15-minute zones also created. Without 15-minute zone creation, if prices come even tomorrow, this will be acting like a high priority zone only. But tomorrow again a new 15-minute zone is created, and after that is violated and reaches here, still it is a high liquidity zone. It may work, but it will work like a low priority high liquidity zone. That means 80% success rate you can't claim from this zone. If a new 15-minute zone, demand zone is created and then come. Without creation of new 15-minute zone, if it retraced back to this zone, still it will work like a high priority, high liquidity zone. 80% success rate will be there. See, still 20% chances are there to failure, but probability is less. But see what happened today? This zone is violated. Now trend is changed to uptrend. By the time it reaches to our recommendation, what is the trend? Uptrend. Now you are taking a trade against the trend. When you trade against the trend, what will happen? Most of the times your trades will be failed, because we cannot trade against the trend except high liquidity zones. The daily 75 minutes high liquidity zones, they work without the trend, irrespective of the trend. See, this is violated. Now what people say? Recommendation is failed. Why people say recommendation is failed? Because they didn't have knowledge. They simply believe on the recommendations. They get loss. Okay, while getting the loss, to satisfy our ego, we will blame the person who is providing you the recommendation. But what about our finance, our investments? They're all gone. This is the reason why many people are getting losses when people are providing the recommendations. That is the reason why stock market, without the subject, you cannot accept the recommendation. Every recommendation is having some justification at the time of providing the recommendation. But markets are dynamic. That justification will be, will be invalid. The justification may be invalid during the live market. You may not be knowing that justification has become invalid. Only the person who provided you the recommendation, he will be knowing. But he can't communicate with you every time, right? His job is just provide recommendation, leave it, that's it. After that, it is your headache. We trust that guy, or we trust that recommendation. We don't trust ourselves. Guys, remember, you are the best people to judge yourself. You cannot judge the other people. You cannot say other people are superior. People are providing a recommendation, might be having a very good knowledge. But how long the recommendation is valid, nobody knows until in the market dynamically it changes. See, today you have seen two examples today, how market dynamically changed and how our recommendations are invalid. In this example, even your recommended zone is violated completely. Whoever invested the money, their stop loss would have been hit. See the next example. Chambal Fertilizers. This is also a bearish trade setup stock. And this is the 5-minute zone. Same zone is also 15-minute zone. Drop based drop. and the zone is violated today. The zone is violated because of the other reasons. The reason you are already aware, this is a tested zone. And prices went deep inside. Earlier we took. This is already tested zone. We would have taken a trade yesterday. But yesterday we can't take this trade because yesterday at almost closing hour price entered. After that still it fell down sharply. And today further it fell down. And then started moving. And we know this zone will be violated because it is a tested zone. And no supply zones are created. There is no 15-minute supply zone. See here, you didn't see. So that's why this is the only supply zone. After its violation, now trend is changed to sideways. Because the trend is changed to sideways, now what will happen? You need to look for 15 minutes demand zone. So here you have a 15 minutes demand zone. And this will be the responsible for trend change. This is the trend change horizon. This is a TCO zone. After that the retracement didn't happen. Maybe tomorrow it is possible before creation of a new demand zone. This is not a new demand zone. Rally candle, ERC candle. This is a ERC, failed ERC candle. Failed ERC candle cannot be used as a base candle. Always remember. I remember some of you are asked this question recently. Failed ERC candle cannot be used in base. Base you can keep only narrow range candle or medium size base candles or medium size leg candle if earlier base candles are available. Base you can keep either NRC candle or medium size base candles or medium size leg candle also you can keep, but the condition is there should be already existing base candle before that. Only in that scenario you can keep. And this is the one you need to fine tune. There is no fine tuned proper structure here. If that is the case, next time prices enter into this zone might be violated easily. There is no proper 5-minute zone is available here. That's why fine tuning up to 5 minutes is very, very important. Everybody feels this is an excellent TCO, retracement, I will take a trade. People may think like that. But actually order flow is not there. Then why this zone is violated? Because it is already tested. There is no proper order flow. That's why easily without strong order flow it is violated. Maybe that could be the reason. Or in this rally base rally they might have added additional flow. 5 minutes. This is a 5-minute zone only. Outside the 15-minute zone. So such kind of TCO zones we will ignore. And next one is HDFC AMC. This is also a 5 minutes bearish trade setup. See, this is the one software suggested yesterday. Drop base drop. Let us assume I gave you recommendation. When prices come into this zone, you just short that zone. But anyway, today prices didn't come. But imagine if there is one more 15-minute zone is created here. We have a drop candle, you have 1, 2, 3, 4 base candles, and then you have a drop candle. There is a fine-tuned 5-minute zone here. You have drop candles, 3 candles, and then a drop candle. It looks like a failed ERC candle, right? I already explained sometimes failed ERC candles you can use in leg out. They have a sufficient body and the body should completely come out of the zone. Completely means not full body. Majority of the body or considerable amount of the body should come out of the zone. At the time you can use. And after that prices are went more deep inside and then came down. So we can't plan a trade in this. But maybe there could be some 1 minute zone here acting as a high liquidity zone. Probably that might be holding all these prices. Let me look into the 1 minute time frame. You have a drop, base, a drop. This is a NRC candle. Can be part of the zone. Probably this 1 minute zone is holding the prices. Let me go to the 5 minutes time frame. See, this 1 minute zone is holding. See the rejections. So strong order flow. Next time again pushed the prices, but we won't get a good RR from these trades. So that's why we can't plan any trade from here. Because of multiple tests, we are assuming it could be a high liquidity, 1 minute high liquidity. And also because of these rejections, we are considering. But anyway, it didn't provide any trade opportunities today. This also we didn't plan because already prices moved deep inside. But here question is, this is the one you can't plan a trade. Once a new zone is created, this is no more a bearish trade setup related stock. This is the bearish trade setup. If this 15-minute zone is violated, trend will be changed. Next, you look into the LTF. LTF also we have very good learning. LTF is also a bearish trade setup stock. This is what suggested by our software. It is violated, right? Okay, violation, there are reasons because a new 15-minute zone is created. But even before that, we got a trade, bearish trade setup trade we got. See this today's morning 9:15 candle. We got a trade from this zone. See prices went inside this. This is the 5-minute zone suggested by our software, drop base drop. And also our software suggested this is having confluence with 15-minute zone. Because we filtered based on 15-minute zone confluence. Because every day I am generating the bearish and bullish trade setup stocks having confluence with ITF time frame. I am generating for all the income trades. Not only HIT, even DIT, even WIT, even MIT, all the stocks with ITF time frame confluence, those setup related stocks I am generating in our software. If you look into the most recent reports, our software reports, you will understand. But all the premium subscribers are aware of this point because every day they are seeing these stocks. This is drop base drop, hidden body. And then I went to 15 minutes and identified the 15-minute zone. So already software identified it. That means there will be a 15-minute zone. So drop base drop. Software will list only 5-minute zone, whichever the time frame you select as a entry time frame, that it will list. Remaining you can identify. Because software already suggested this is having a zone confluence. So go to the 15, easily you will find a 15-minute zone. See here. Now inside the 15, this 5-minute zone is there. And today we got a trade. Today in the morning, 5 minutes candle prices reached this zone. So even 1 minute, this is the morning, 9 o'clock, 15 minutes candle. And many times the morning, 9 o'clock, 15 minutes time, there are chances that some of our trades will be missed out. Some of our trades. Because morning 9:15, everything in fraction of a second will take place. So many orders, all the people's orders. If you would have kept your trade with some stop buffer, maybe your trade would have been executed. This is a type 2 proximal. Even type 1 proximal also your trade would have executed easily. Because this is here it opened and went up, and then the order flow here, because it is a bearish trade setup. See how it pushed, and see continuously it pushed. Here some retracement, but again further it pushed. So in just morning 9:15 and when it reached morning 9:27. In just 15 minutes, the trade is completed. It might have given you a very good profit. Actually, LTF has given around 10,800 rupees profit as per one futures lot. 10,800 rupees profit in futures. And around it is a 5.5% or 5.6% ROI from here to here. In just 15 minutes. So bearish trade setup worked here. After that, what happened? After this trade is completed, again a new supply zone is created. Rally base drop. And this new supply zone is violated. The moment it is violated, trend is changed to sideways, and now no more this is valid for taking the bearish trade setup. Now TCO zone is created in the 15. We have a drop, 2 base candles and a rally. This you can fine tune to 5 minutes. So here we have a fine tuned 5-minute zone. We have a drop, 2 base candles and a medium size leg candle also can be part of the base now. Now there is a leg out candle. This is the fine tuned 5-minute zone. Here you can plan a trade. If anybody would have taken a trade in this zone, see, easily violated because it is no more a bearish trade setup. And immediately we comment our recommendation is failed. See, today all the recommendations are failed, right? In case if you don't have the subject. Let us assume you don't have the subject. You know what is bullish and bearish trade setups. You don't know. You don't have any idea. Because you don't have any idea in the live market, you won't observe these scenarios. You are simply waiting until prices reach the zone. Here it reached and then violated. It stopped out. Because it is stopped out, you will exit with losses. So that is the reason why always I am saying recommendations never work. They may work sometimes. It is a luck, purely luck based recommendations. Probability is higher for failure. Maybe if 10 recommendations will give somebody, maybe 1 or 2 recommendations will work, remaining 8 will fail, and the people and the person who is giving you recommendation, he will talk about only those 2 stocks. He will not talk about the other stocks. And by seeing those recommendations, success, people always tell, okay, that person is excellent, he is amazing. So much profit it has given 1:10 RR. So let's go and take his recommendations. And you will pay a lot of money to him. After that, all your capital will be losing. And finally you realize, stock market is very horrible. We can't invest in stock market. We can't trade. Or the person is giving wrong recommendations. Actually, your problem is with us. Why problem is with us? We don't have willingness to learn the subject. You should accept learning the subject. If you don't accept learning the subject, how do you expect you make money? Those people dedicatedly learning the subject, they always get profits. See how many profits we got today. Whichever the stock is going to violate, have you predicted that? Yes. Reason, trend changes. When the trend changes took place during the live market, it took place. How we identified? Because the suggested zones, new zones are created. The moment new zones are created, we didn't depend on the earlier zones generated by the software on the previous day. But still, software suggested stock only, we are taking the trades. But in newly created zones, we are taking the trade. That way we made the money. That's why you have to understand market is dynamic. When market is dynamic, if you have the subject, the changes you will identify. This is the reason why I always say markets are dynamic. Markets are dynamic. Markets are dynamic not only for changing your targets. Markets are dynamic even for changing your entries also. See today how we changed our entries. Instead of taking an entry in this zone, okay, 9:15 it is executed, let us assume it didn't execute. Instead of taking an entry, probably you will be taking an entry here. Maybe in this stock, the 5-minute zone, here it reached the 5-minute zone. Why we didn't take? Because RR is not there. Drop base rally, RR is not there from this zone to zone. That's why we didn't plan a trade. Otherwise it gave an entry. See here, prices came down, again retraced, gave an entry and then came down. The only reason why we didn't accept, because of this drop base rally, the target and your entry, there is no RR. That's why we rejected this trade. Otherwise it would have given you, if the RR was there sufficient, it would have given again profit. See, the retracement happened. Hope all of you got clarity about what is an independent trader, why you should be independent trader, why we all should be independent traders. Hope you got the clarity. If you agree, please say yes in the comment section. Still, if you don't accept, if you want to say no in the comment section. At least I understand how many are still recommending on the still how many of you are depending on the recommendations, even after giving such a big explanation with clear-cut examples. So I want to understand the people who are saying no also, please put the comments in the comment section. Okay. And when it comes to the high liquidity zone, so yesterday we identified only 5 minutes I will complete. The reason we didn't get the trades, but I will show you. Even fine tuning also I am not going to explain, because currently whoever listening the videos, you got some clarity, but I will just show you. This is already I explained AU Bank how to fine tune in the one of our earlier previous videos. Yesterday we got 4 high liquidity zones. All the 4 are from a daily time frame. 75 minutes time frame, we didn't get any high liquidity zone yesterday. See, today also prices are moving between. We have a high liquidity demand zone and a high liquidity supply zone. It was moving between these two zones. But we have a fine-tuned zones. And Indian hotels also previously we discussed. This is also a daily high liquidity demand zone. Prices came very close to this, but not within the stop buffer area, a little above that. Sorry, it's not within the entry buffer area, a little above that. So we didn't get the trade. That means we missed the trade because we are little short of getting into our fine-tuned area with entry buffer. But see how sharply it went up. Next one is LTTS, L&T Technology Services. This is also a daily zone. We have a fine-tuned 5-minute zone. This also came very close, but short of our entry buffer already added into this zone, still short. That's why before reaching the entry buffer, prices sharply moved up. Otherwise, it could have been a good trade for us. Next one is Indus Towers. This is a supply zone, daily high liquidity supply zone. Drop base drop. Already fine-tuned this zone up to 5 minutes. But today prices didn't go at all. Even near also they didn't go. Very far away. We didn't get a trade. So this is the way we didn't get any trades on high liquidity zones from these daily high liquidity demand and supply zones. Hope this information will be useful to you. And also I wish you people, especially those who are accepting those who are thinking about recommendations, seriously you will focus on learning the concepts. See, when I am taking such a great effort, making you understand the reality, even still if you don't realize, then I am helpless further. because of I can't give you any more further better suggestion. I am thinking today's session is the best example to make you realize why recommendations will fail. And all the people who wants to become independent traders and agree, please put your comment in the comment section. I want to know how many of you are seriously learning the subject. Okay, let me take a break and let's all meet again in our next video. Thank you.